Hello and welcome to PipCountFX's weekly economic outlook video. My name is Kayan Kalipha. I'm the head trader at PipCountFX, and this week I'll be going over the charts for the week starting 3rd of July 2017 to the 7th of July 2017. First, I'll be starting off with the fundamentals, driving prices, and then I'll be going over with the technicals for the 8 major currencies. So first of all, we're starting with the euro. The euro at the moment has had a lot of bid and a lot of buying behind it because at the moment the momentum is being bought into the euro for the central bank, the ECB, to start to taper away from its bond purchasing program, which is known as quantitative easing. As since 2007, for the first time, the eurozone is now in a growth cycle for the first time. Of course, its quantitative easing program has started to work. Unemployment has dropped considerably, wages starting to increase, inflation starting to pick up, and now the bank's actually starting to hit some of its targets in the short term and moving towards its long-term goals of getting inflation back up to 2%, getting unemployment back down to at least 5%, and wages are starting to increase. So at the moment, the fundamentals driving the euro is that traders and investors are buying the euro into the expectation that later on this year and around December times that the bets are being placed for that the ECB, the central bank, will start to taper away from its bond purchasing program as the eurozone economy now starts to grow by itself as unemployment goes down and it starts to pick up. This was also followed up this week by the head president of the Euro ECB, Mark Draghi, who said this week that he expects inflationary pressures to replace deflationary pressures in the eurozone as the economy continues to improve. And this week we saw a lot of heavy buying for the euro on the back of these comments, and really took the euro to some really high places in terms of against strong currencies such as the US dollar and really weakened currencies like the Japanese yen. So that's the fundamentals behind the euro at the moment. If inflation numbers keep coming out positive, if unemployment keeps going down, if inflationary data comes out, such as retail sales, which are bullish, and wages are shown to pick up, if GDP comes out positive, the euro is going to keep getting bought into the event that the market's trying to price in for December, which is where the market is expecting the ECB to turn around and say that they're going to stop quantitative easing, or start to taper down its quantitative easing. I think at the moment they're buying about 80 billion a month worth of bonds to pump money into the system, and if they start to taper away, then that's showing the market that the eurozone is in a growth cycle. So investors are buying into this event, and that's why the euro is showing considerable strength against against a lot of the major currencies. So the first euro currency we're looking at is euro US dollar. If we look on the daily chart, you will see the euro has really broken some considerable levels at the moment. This was a major support resistance level, 1.1300, and after Mark Draghi's comments, it really pushed price straight through this major 1.1300 handle, push it straight past 1.1400 handle. We've now seen a pullback and it's come back to test the previous resistance, which it turned to support. And now we can expect next week, if the US dollar NFP numbers come out negative on Friday, or maybe even leading into Friday, we may see the euro start to push up towards this 1.1500 handle. This is the next major resistance level. If we push over to a weekly or a monthly chart, you can see where prices have reacted from these levels before. So as we can see on the weekly chart, prices have come up around these areas before and been sold off. And then the next major resistance is up here, which prices have been sold off. So as we can see around here, we have a lot of high wicks and a lot of turnarounds in price. So this is an area now the euro is coming into, which is a major selling area for the dollar. So this is an area you want to be paying close attention to. Personally, I feel at the moment that if data does fail for the US economy on Friday for NFP data, and wages are not picking up, or jobs data disappoints, and I really feel the euro has the momentum to push up to 115 and maybe even try and test 1.1600 handle just up here. So that's the setup right now for the Euro USD. However, on the other hand, if USD data comes out positive on Friday for NFP, and data starts to pick up for the US economy after this kind of sluggish first 6 months of the year, then this could heavily sell off aggressively and come back down. Also to bear in mind is that the market is buying the euro in expectation that the central bank may taper back from quantitative easing at the end of the year, as I mentioned previously. However, if, for example, data starts to come out that shows that this may not materialize because inflation doesn't start to pick up, jobs growth doesn't start to pick up the way they want it to, unemployment doesn't go down as fast as they would like, we may see the euro correct and move considerably lower as the market has to reprice the euro at a level which is more in line with the actual fundamentals currently in the market. This is all being bought on expectation. This is not actual hard data. This is all to do with expectation, what the central bank's talking about, because the market's already trying to price in this tapering away from quantitative easing. However, if the data comes out that doesn't support this, we could really see the euro start to lose ground and get repriced and probably come back down to 1.1300 handle, or maybe even lower. The euro is very high at the moment against the dollar, and especially against the dollar, who ultimately is in an interest rate hiking cycle at the moment. The US economy is the only economy out of the 8 major currencies which is in an interest rate hiking cycle. So it'll be very interesting to see how high the euro can go against the dollar. But I feel any gains against the dollar won't be overextended unless the US economy starts to really crumble and the data coming out doesn't support an extra rate hike at the end of the year, and that will cause a lot of problems for the dollar moving forward. So that's euro US dollar. For euro yen, as traders, you should know that the yen is a safe haven currency. So in times of market uncertainty, the yen appreciates in value. So the USD yen has a direct impact on all yen crosses, because if the US dollar is performing well and people are buying dollars, then there's less risk in the market. And unless the Japanese yen has a strong economy, Japan has a strong economy, the yen will weaken if the US dollar gains. And as we can see at the moment, this week, as I'll show in the next charts moving forward, that the US dollar yen has pushed higher, and this has really weakened the yen, and especially made the euro be able to make strong gains against the yen at the moment. So at the moment, the Japanese yen, we broke above this resistance level here, which is 1.2700. And if we go down to a monthly chart, we will see the next resistance, major resistance, isn't up until this price level here, as you can see, which was a previous support, previous resistance, previous support, which is 1.1300. So that's the next major resistance we have. We have some room to get there still. We have about 200 pips to get to that price level, 300 pips. So this gives a nice profit target if you're going to be buying the euro, as long as data comes out positive for the euro up until this level here. So we may see prices may pull back and test support here, which would be a great buy opportunity. So buying euro on the dips would be good. So as the euro comes up and pulls back lower, it'd be great opportunities to buy the euro back up. And this is the next major resistance level we have just up here. So that's the fundamentals for the euro at the moment. We can also look at euro Great British Pound. At the moment, the euro Great British Pound the euro tried to go up higher, but then met this major monthly resistance, which is 0.88500. If you scoop down to the monthly chart, you will see where price has been is the current resistance that's been used for quite a number of years. The market has used this area as a resistance level, which is why the market has bounced off this level here. I suspect because of the Brexit negotiations and the whole Brexit situation being bad for both parties in terms of economics, I feel like the pound and the euro pound will probably stay in this range here between 0.8700 support and 0.88500 resistance. So we may see the market just range in between here, which you've pretty much seen since here really. It's really come down, gone back up, come down, and now come back down again. So this is the area I'll be watching if I was you for euro Great British Pound. You could be buying at the support levels here and selling at the resistance levels here. But it's clearly we're in a range at this moment of time between this area. Of course, pay attention to the fundamentals, driving prices. But at the moment, this looks like the nearest price targets for the euro Great British Pound. So moving on to the Great British Pound against the US dollar. The fundamentals for the pound at the moment have been very, very bullish. This is not because of hard economic data. This is because since Brexit, the pound depreciated by 20%. As you'll see here, before Brexit happened, the pound was valued at $1.50, and look how much the pound has been devalued since Brexit. The pound has lost a considerable amount of its purchasing power when exchanging to other currencies. And what this has done for the British economy is, as the pound lost so much of its purchasing power, what happened was businesses importing goods and services from abroad found that the pound was now 20 to 30% less valuable when exchanged to other currencies. So when buying goods and services from abroad, prices were more expensive, and these more expensive prices was causing businesses to have to spend more to get their products. But of course, businesses don't want to lose their profit margin, so they was passing on the higher prices to the consumers in the British economy, and that was causing prices to go up. So now inflation in the British economy has gone to nearly 3%, which is 1% over the central bank's 2% target. And the central bank has been saying, as of recently, they don't want to raise interest rates for the simple fact that interest rates are going to make households more poorer as their mortgages payments go up, car payments go up, all sorts of payments, credit card payments go up. They don't want to increase interest rates because it will squeeze households even more. However, as of late, because inflation's got to 3%, they're now starting to have to think about raising interest rates. And 2 weeks ago, they had a vote on why they think interest rates should stay at, and they voted to keep it at 0.25. However, it changed from votes from 7 to 1, with 7 members saying to keep interest rates as they are, only one voting for a hike. It changed to 3 to 5, and then Mark Carney, the governor of the Bank of England, turned around and only a week ago said he doesn't think that they should raise interest rates right now because inflation is only down to the weak pound. However, this week he turned around and said they will discuss the possibility of maybe having to hike interest rates to offset inflation. After he said these comments, you can see the pound made strong gains against the dollar as investors were buying into this expectation that perhaps the central bank may raise interest rates. So what you'll start to see is in the market, there's a pattern that happens here, is where the market will always hear of a rumor or an expectation that a central bank might cut rates or hike rates. And whenever the market gets this whiff of information or they start to predict that a central bank is going to make a move of rates, they'll start to buy a currency into the expectation that this may materialize, and this is called getting ahead of the curve. So if the central bank does come out and say they're going to cut rates, they've already priced that into the market and they've already pushed the currency higher, which is what you're seeing right here now against the US dollar. However, at the moment we have this major resistance here, which is 1.30500. As you can see, the market has bounded off this area here. This was a previous support over here, previous support, previous resistance. So this is a major area here. However, at the moment, I feel the pound won't be able to push past this resistance, although it may, until weak economic data for the dollar comes out next week, Friday, for NFP, or more data comes out that puts pressure on the central bank to have to think about increasing interest rates, like a higher CPI reading or higher wage growth that gives the bank the confidence to maybe have to hike interest rates. So at the moment, with prices coming to this resistance here, looks like a good sell at the moment, just based on the fundamentals of not really seeing the pound have the strength to push past here unless data comes out and gives it the strength to move past this major resistance. So a good sell here at the moment, and if prices do rebound and start to push down, you could buy it, you could sell Great British Pound USD on the pullback. So if price pulls back down and goes back up, you can start to sell the pound up until the support level, which is 1.2700. So it looks as if we're going to be stuck in this range for a while. Of course, until the fundamentals change, and then of course the currency may go higher or it may go lower. That's the Great British Pound US dollar. We also have the Great British Pound Japanese yen. If it just changes over for a second, just wait for it to load. This is the same situation with the Great British Pound Japanese yen. What we've seen with the Great British Pound Japanese yen is same situation with the dollar. after Mark Carney's came out and said they'll discuss interest rate hikes, the pound has really pushed higher against the yen, and also on the back of the yen weakening because of the strength of the US dollar yen, which kind of dictates the strength of most yen crosses in general. However, the market is actually coming up to this major resistance level here, which is 1.4800. This resistance level here has been used by the market on multiple occasions. As you will see, the market topped out of this price level, and if we go to a higher time frame, such as the monthly, you will see this has been a resistance, it's been a support, it's been a resistance, and it's been a support in the past as well. So this is a major area the pound's coming into. And again, for the pound to get past the Japanese yen at this price level, I would expect that there has to be economic data that comes out that allows the pound to be valued at a higher exchange rate past this 1.48 handle. Therefore, that if prices do come up here, you could expect heavy resistance and heavy selling at this price level. So personally, I would wait to see if we can get any other strategies to confirm that using the RSI divergence or just plain fundamentals. However, I do believe there will be strong resistance here. So selling Great British Pound, Japanese yen at this price level here will be a great opportunity to trade this currency pair. And you could see some strong gains for the yen from this price level, unless data comes out and gives the pound more support to push past this resistance level. So that's the pound for the day. Moving on to the USD Japanese yen. So as stated, I'll give you the fundamentals behind the US dollar. So the US dollar was on an interest rate hiking cycle. It's already increased its rates twice this year. There's another expectation of the rates being hiked maybe again in December. However, what happened was the US economy had been booming last year. As you can see, since the Trump was given the presidency, the US dollar went on a huge rally based on his infrastructure and tax cuts in fiscal policies that he was going to implement as a government. And investors started to buy the dollar because his policies would cause high inflation. Of course, high inflation makes central banks raise interest rates, and high interest rates give a currency value. So that was the reason why the dollar has so much momentum on the back end of 2016 coming into 2017. However, since that momentum was pushed so high against most currencies, data for the first 6 months of this year really started to disappoint expectations, and the disappointing expectations really made the US dollar start to lose a lot of ground and start to pull back against most currencies. However, 2 weeks ago, Janet Yellen, the head of the Fed, said that she thought that the economic data being released for the first 6 months of the year was just transitory. It wasn't something to pay close attention to. And she said another rate hike is still on the cards. And what we've seen since then is we've seen the dollar start to aggressively push higher against the yen and move higher and higher. This is the reason why the yen has been losing a lot of its ground against other currencies at the moment. It's because the US dollar yen is the currency pair that sets a tone for yen, as the Japanese yen is a risk aversion investment at risk. Investors buy when there's sentiment in the market which is that the US dollar is struggling. So that's the reason why the yen has been weakening. We've seen a push higher. We've seen a push past the resistance levels 1110 and 1110,500, and it was coming up to 1112, which it finally broke through, and it's now sitting on 1112 as a support. My expectations is that if NFP data comes out positive on Friday and there's no disappointing data, the US dollar will start to make strong gains and push back up to try to test this 115 handle, which is the next major resistance, as we can see up here. Every time the market was come up here previously, they had been rejected on multiple occasions and pushed back lower. So if data comes out on Friday positive, then we'll start to see the euro get bid and push higher up towards 1115. However, if data disappoints, we can see the US dollar yen start to push back below and maybe test back down to 1110 and use these areas as good opportunities to buy the US dollar back or as a support level. So that's the US dollar yen. Moving on to the US dollar CAD. The CAD has had a lot of bullish momentum at the moment. This is due to simply the fact that oil prices have been considerably low, and as you guys should know as traders, that the Canada is a huge oil exporter in the world. So if oil prices drops, that affects the revenue of the Canadian dollar, and that affects the value of the Canadian dollar, which is why the US dollar had been pushing so higher previously up until it came up to this resistance level up here. However, since then, the fundamentals did change as the central bank Canada came out and said that their forecast for the next few years ahead had adjusted the lower oil prices and said that the economy was still looking like it was going to grow and expand. And since then, a lot of data came out that supported that. There was good retail sales, there was good inflation numbers, good jobs numbers, good GDP growth. And then the central bank governor started to come out and say very hawkish tones about they expect inflation to pick up. They might have to increase interest rates, and this really started to give the Canadian dollar some momentum. And we saw heavy gains for the Canadian dollar against pretty much every currency, to be honest with you. And the Canadian dollar was really pushed lower. And then he came out again and he spoke again, and he reiterated what he had previously said, and the Canadian dollar pushed lower and has really pushed back down to this major support. So at the moment, the Canadian dollar is at this major support, which is 1.300. It looks as if it's broken the support for now, but as you guys know, support is never an exact number, it's more of a zone. So zones can range from 50 pips or more. So the next, if it does push past here, it does break the support zone, the next major buying area is 1.2800, which is the next support here. So with the Canadian dollar, US dollar, it'll be very interesting to see what happens next week in terms of economic data for the US dollar. If NFP comes out positive, we could see prices really push back higher and start to really push back towards the upside for the US dollar CAD. However, if the data is negative, we could see US dollar CAD start to really test and push lower towards 1.2800. So what I would do is I would wait to see what the economic data is and how the fundamentals play out before trading this currency pair, as both are ultimately strong currencies, with the US dollar still raising interest rates. However, the Canadian dollar has been getting bought into and sold heavily off the back of the central bank talking about a growing economy and maybe raising interest rates. So one thing to really pay attention to is what you'll see is that, as we've seen with the euro, the pound, and the CAD, traders listen to what the central banks say. They listen to what they're saying about interest rates. And when they hear what the central bank's saying, and if they're saying hawkish comments about maybe interest rates being increased or hikes, as we see, traders start to buy that currency before that monetary policy will be materialized into fact. They'll start to buy that currency to get ahead of what we call the curve. So they want to buy into the event of the central bank actually doing what they're saying they predict they're going to do, which really gives a currency its value. So that's the US dollar CAD. Moving on to the Aussie dollar, US dollar. The Aussie dollar has been gaining quite a lot as of late. This is due to iron ore prices moving higher. China's had some good economic data coming out recently, as China is Australia's biggest trading partner. A booming China means that China purchased a lot of goods and services from Australia, which gives their value, their currency value. So it's really important to always pay attention to China's data, because China's data has a direct impact on the value of the Aussie dollar. Because if China starts to fall or starts to falter and not grow at the pace that they expect it to, then that will have an impact on how much goods and services are bought from Australia, and of course that has an impact on its currency's value. So as of late, it's been good economic data coming out of China. Iron ore prices and metal prices have been increasing. However, for Aussie dollar, US dollar is now coming up to a major resistance level, 0.77500, which since 2015, for the previous 2 years, if I'm not mistaken, has been a resistance level that the market has rejected the Aussie dollar from getting higher every time the market has tested this area. This is an area where, of course, the market doesn't deem the Australian dollar to be valuable enough past this price target when exchanged into dollars. And as we can clearly see here, since 2015, every time the market's come up to this resistance here, we've seen sellers coming and push the price back down. So the Aussie dollar has not been able to come past this major resistance level here, as traders do not deem the Aussie dollar to be more valuable when exchanged into dollars past this exchange rate. So we can expect, when prices come back up here, as long as data for the US dollar does not get extremely bad, we can expect to see again, when prices come up here, heavy selling at this price level. So this will be a great opportunity to sell the Aussie dollar US dollar at this resistance level 0.77500. Selling here is a pretty much a safe bet. Well, nothing is a safe bet in trading. However, when you can see that there's a heavy resistance at this level, there is a high likelihood that the US dollar sellers are going to come in and push this currency pair lower, especially if US data does come out positive, and there's no chance that the US dollar is going to be able to push higher past this level. We have the same setup for the New Zealand dollar US dollar, where this currency pair has come up to this major resistance level, which is 0.73500. This has also been an area that sellers have used to reject the New Zealand dollar from moving higher. So as you've seen here, every time the New Zealand dollar has come up here on this monthly chart since 2016, every time the market's come up here, sellers have pushed the market back lower and not deemed the New Zealand dollar to be valuable enough past this exchange rate price until fundamentals or economic data comes out to state otherwise. We also have at this price level here, if you check out the RSI, we also have a weakening momentum for this currency pair. So as you can see, as prices on this currency pair get higher, we're making higher highs. It's now coming into this major resistance, and then you can see that the market has been moving higher. However, the RSI is showing divergence as it's making lower highs. Divergence on the RSI clearly states to us that the momentum in the trend is weakening as it comes into a major resistance, as the RSI is making lower highs while the market makes higher highs. If you have RSI divergence while the market moves into a major resistance, you pretty much got a guaranteed bet on your hands. Well, not a guaranteed bet, but there's a high likelihood that this market is going to reverse at this price level, especially if data comes out positive for the US dollar next week on NFP. So this will be another great opportunity to sell the New Zealand dollar US dollar and hold down to 0.7200, which is the next support. As you can see, the market was holding off sellers at this price level, which will give you a good profit target if you do sell at this price level of at least 150 pips if the market does come up here. So that's the major currencies for the US dollar. If you guys have any questions, you can shoot me a message on Telegram to PipCount Trading. Thank you for joining this video. I hope it's been informative. I hope it helped you. Please follow me on Instagram at trades_forex, and we'll be having another weekly economic outlook video for next week. So have a good weekend, guys. Thank you for watching. Take care. Bye.